Now here's the 7 octave plotted on the screen. In this particular chart I have all 3 octaves encompassing the price action, and that's starting at the 224 to 448 level, and then the 2 octaves above that, the 448 to 896, and then up to the 1792. And you can see the prices marked on the right side of the drawing tool there. So you can take a look at that one. So the 7 octave fits in with soybeans the best, uh, and I'm going to show you why in a second here. But this one has the nicest match at the natural octave levels and interchanges. So that's the beginning of what you want to look for when you're looking to see if there's a dominant octave. Look at the octave lines first, and then there's other subtleties you can use to match this up. And a lot of this stuff I talked about in the Gann science book, 5 or 6 years ago. And then Plato is a different source that I did not look at back then, but Plato is confirming a lot of those thoughts and ideas from the other Gurdjieff, Keeley, and Gann material. Okay, let me move on a bit from here. So why may 7 be the most important natural number level for soybeans? Well, soybean has 7 letters in its name, soybean. The first trade natal is also reducing to a 7. And then we could build a square off that. That's a different application I'm not going to get into now, but that would give you a 49 square. But I want to just look at these 3 natural levels of octave in soybeans. And what I've done here, I've taken some of the tone levels out, and I've only left in the 3 most important levels of the major third, the perfect fourth, and the perfect fifth. So I slid the chart over to the left a little bit. You can see the percentage ratios here, and I've drawn these orange dashed horizontal lines on at the octave levels, or close to them anyway. So you can see that here's the lowest octave, then the second octave above that, and then finally the third octave above that. So those orange lines are laying out your do tone levels, so you can kind of see those a little clearer now instead of the gray lines. And then I've only left the intermediate frequency levels of the third, fourth, and the fifth, which are the mi, fa, and so tones in the musical scale. So take a look. I'm going to go from right to left. Take a look at just the do levels and how they fit the key areas of support and resistance on this chart. Take particular note of when I go back in time to the low octave, the first octave, and as we move back into the 50s and 60s, when the market was trading below that level, look what happens. We get a major support line down there all the way back into the late 40s, which is as far back as we go. And that is the 224 to 448 level. Now I want to illustrate a key principle. It's another principle that comes from the Bible, so let me make a note of that here. So as you know, Gann did take a lot from the Bible, and one of the key principles in the Bible is the concept of time, times, and half a time from the book of Daniel. It's really an important piece that ties into the law of vibration with the law of 3 and 7 and the divisions of 7, the 7 tones in the octave, the 7 days of the week, and so on and so forth. So with Daniel's time times and half a time, if we assume that times is just a multiple of time, and its most basic multiple would be 2, that would give us a total accumulation of 3.5 times. So what 3.5 times does, if we take that into a summation of half units only, that gives us a total of 7. So we have 7 base units or harmonic units inside 3.5 octaves. Because with each octave doubles, so if we take our second octave and split that in half, that is equal to 2 of our lower octaves. And if we take our upper octave and divide that in half and then half again, that gives us 4 total harmonic units of the initial octaves. So that gives us 7 segments of our lower octave. So that gives us our time times and half a time component. What happens generally when you complete 3 ascending octaves, you are going to be at a terminal point. So if we take a look at that, you can see we've got this major support at this area here around the 224 level for many years, and we didn't even break that octave until we got to 1973. So look at here where our starting point is at the 224 level, and as we move forward in time, we move up into the second vibration area in the middle octave, and we're locked into that range from the time we enter there in 73 until we finally break out of that level and stay into this most recent higher octave. But we don't do that until 2008, when we finally clear that area and stay there, and now we're vibrating in that higher octave. But look what happens when we complete our time times and half a time octave sequence. When we finally complete that up at the 1792 level, we've just completed our Daniel time times and half a time, and it took how many years to get to 2012 to make that high. But once we hit that level and completed the time times and half a time level, we go into an extended bear market that lasts from 2012 all the way down to 2020. So that is the power of the biblical concept of Daniel with his time times and half a time. So this application of the octave is not only valid in price, this is also valid in time. That's another exercise. But what I wanted to do was take Plato's Fathers of Primes and demonstrate how to go through that numerological system, use that in the octave structure, and identify what particular octave may apply to one particular market. So there you have that. There is a lot more to this. I'm going to leave that for another video though, so we'll elaborate a little bit more on this. What I'm going to do is take these various octaves and put the levels together and show you where we get symmetry and harmonic confluence between certain numbers in the octave that are going to give us some indication of where the strongest support and resistance is going to be in this particular market. So I'll be back with that in the next video.